Okay, good morning, JT. Thank you so much for joining on this call today and for your willingness to come drop some gems for us on how to learn what million-dollar taxis are doing so that they can legally avoid paying taxes, right?
Correct. Yeah, correct.
So quickly, can you introduce yourself and let us know where you are and what you do?
Yeah, so my name is JT Pels. I'm a CPA located in Des Moines, Iowa, smack dab in the heartland, right in the middle of the country, but I can service clients in all 50 states. No foreign clients, but everybody that's in the continental US and Hawaii and Alaska, we can help you out. What makes me a little different than most CPAs is that most CPAs just focus on tax preparation. And I focus more on tax strategy, tax planning. So it's a little bit different, and we'll get into what the difference is in a little bit, but that's my backstory.
Thank you so much. Well, maybe some people don't know me too. Maybe I should get a little intro about
Yeah,
myself.
exactly. Yeah, give it out.
Okay, my name is Morvi Harris, and I am the CEO, Money Max Bookkeeping Services. We specialize in mental health, bookkeeping and accounting. And I am a certified professional bookkeeper. I'm also an advanced certified QuickBooks Online Pro advisor. And let's dive right into it. Are you ready to do this?
Yeah, let's do it.
Good. Oh, we have some people waiting.
There we go. Let's let them in, and then
yeah,
we'll get
let's
started.
give them let's give them a couple seconds to get in. Okay, I'm sure they'll join us. I have admitted the ones that were in the waiting room.
Okay, perfect.
Okay, so quickly, JT, what is tax planning and what's the difference between tax planning and tax preparation?
Great question. So I would say tax planning is like Blockbuster, basically basic, going out of business. Tax planning is the Netflix of it. And what do I mean by that? When you do tax preparation is simply just filling out forms for you. What most traditional accountants will do, and I'm not trying to bash them or anything like that, this is what it is. This is how I came up in the business as well. When you go to your accountant in April, March, February, whenever you go once a year, you bring them a shoebox of receipts or some papers. They literally take that paper, take the numbers that you gave them, put them into a software and say, okay, you owe X amount in taxes. And a lot of times for most business owners, when they're first profitable, they get slapped in the face with a $10,000 bill. And they're like, wait, how did this happen? Like, how did I don't have $10,000. What am I going to do? And your accountant just says, well, you just save money, go on a payment plan, and there's not really anything you do. What I do as a tax strategist is I meet with my clients throughout the year and we say, okay, it looks like you're going to have a $10,000 bill, 20, 30, 40, $50,000 bill, and they are out there. And we say, okay, there's two things we can do. We can either just save the money and bite the bullet, or we can proactively look for different strategies to do that. That could be something as simple as entity selection, having a home office, making your car deductible. So those are things that you can do during the year, because if you go to your accountant in April, what happened. There's nothing we can do. I can't retroactively go back and change the facts. But now during the year, we can start to change that and set you up the right way. So that's the difference between tax prep and tax strategy.
So showing up at your CPAs in April does not really, it doesn't maximize your tax savings, is that right?
Correct. It does not maximize them. Really in April, the only thing you can do is maybe put $5,000 or $6,000 into an IRA, which is not the greatest strategy, but it's something. But for the most part, you're done. Every strategy, you have to implement that by December 31st at the latest. And I recommend not doing it then, because there's some steps we have to take. So I'm actually meeting with a lot of my tax planning clients at this time in the year, June, July, August, because now we get to it's a good halfway point to see where we're trending. And now we have 6 months to implement that strategy. Because if you come to me December 15th, it's like, well, I wanted to buy a new car. Now you're like, well, we could write that off. But now you're like, damn, it's December 15th, like it's Christmas. How can I buy a car in 15 days? And then now, what if I say now, hey, if you need a new car, I would start putting that plan in process because now you have 4 months to do it rather than 4 days.
Thank you so much. So can anybody do this, or is it just for millionaires?
No, it's not. Anybody can do this. The difference between millionaires who, when you hear, whether it's Grant Cardone, if I don't know if any of you guys know who he is, he bought a jet 3 or 4 years ago for $150 million and wrote off his taxes for the next 3 or 4 years because he had net operating losses. Now, I'm not saying to go out and do that, but you can implement similar strategies that like he did on a smaller scale. So anybody can do this. And it could be as small as somebody who's making $50,000 a year or somebody who's making millions. Everybody can do it. The only difference between them and the normal person is the education. The laws are still the same.
Thank you. Thank you so much for joining us, Shaman. I see you. We appreciate you. We hope you're going to be picking some of the gems that we're dropping here today. Can you put in the chat box where you're joining us from and what you do? Thank you. Okay, JT, can you give a few examples of tax strategies that we can use to legally avoid paying taxes?
Yeah, we can go over one. I don't want to get too in the weeds here because that's not what this is for. This is more just to introduce everybody to what the strategies are and the idea, because it really is a mindset as a taxpayer. The difference between the people who are saving tax and the ones who are not is a mindset. We need to make that shift that we can do this. And I would say I'm a very conservative accountant. I'm just following the laws of the IRS tax code. I'm not making things up. I'm not skirting things. I am just following the laws that they set in play. That's all it is. So one easy example is entity selection. And what do I mean by that? Is like an LLC. You can be an LLC, you can be a sole proprietor, and you can actually choose the way that you get taxed. The IRS, if you're a business owner, the IRS really allows you to choose the way you get taxed. If you're an employee, you just pay the taxes. It is what it is. There's very black and white. But as an owner, you can choose that, whether you're taxed in the 20% bracket, the personal bracket, it really depends. But the IRS allows you to choose as a business owner. And if your accountant's not telling you this, you need to ask them about that. That's a really easy one. I don't want to get too in the weeds here, but this is just where we start, is just being babbling a little bit. Being able to choose your tax bracket as a business owner is very, very powerful because you're in control now. You're playing the game because it's a tax game, and I'm really good at it.
Right. So are you saying it's up to a business owner to determine how much taxes they want to pay?
Not necessarily
by how proactive or how reactive they are. Is that right?
In a short sense, yes. Now you obviously everybody would choose to pay zero, so you can't just choose your tax bracket, but you can choose a more advantageous way to be taxed.
That's right. That's right. So what do we need to do? What are the prerequisites to be able to take advantage of all these tax strategies?
So the one prerequisite is really just to be breathing. That's number one. And like I said, I say
Right.
that because anybody can do it. You don't have to be a rocket scientist. You don't have to be a millionaire, billionaire. Anybody can do this. And I saw in the comments here, I think it's Shaman. I don't want to mispronounce anybody's name. If you want to go ahead, you can turn your camera on, turn your mic on, and mispronounce if I'm saying your name wrong. It looks like here you're a consultant for mental health practice owners, and you own a private practice in Tampa. Is that correct?
Correct. Can you hear me?
Yes. And
yeah, sorry, I'm driving, so.
Oh no, that's okay. But I'll go ahead. We'll go ahead and you don't have to respond. I just want to make sure I had that right and I wasn't butchering your name. So
yeah, it's Shaman. You're good.
Shaman. Okay, good.
Yep.
Sorry about that. So Shaman. Yeah. So the cool thing about Shaman who's a business owner, is that he can choose the entity that he wants that gives him the best tax advantages. If he was just a regular employee, you just go down a sliding scale and be like, well, I made X, I'm going to pay this. But as a business owner, you can choose the way you want to be taxed. And that's a really cool thing. But to get back to Movi's question, is that anybody that has a pulse and is breathing and is over 18 and actually makes income is eligible or eligible, qualifies to do that. The number two thing I would say is that you're a business owner. If you're an employee, there just really aren't as many tax plays. There are some, but they're more advantageous as a business owner. And three, you have to be organized. If you want to work with us or any other tax strategists out there, the number one thing they're going to ask you is, okay, I need to see your financial statements. I need to see your W-2s and I need to see numbers. I need to see real accurate numbers, because if you're giving a tax strategist a shoebox of receipts, they will not help you. So you have to get organized is the number one thing. And I know for whatever reason, bookkeeping, in my opinion, sometimes people think, I don't want to do it. It's hard. You have to do it. You got to do the fundamentals. And the fundamentals start with having clean numbers, because I guarantee you people like Grant Cardone, we read Amazon hasn't paid taxes for years, Jeff Bezos, they are not showing up with a shoebox of receipts to their accountant neighbor like, all right, here's Amazon stuff, have at it. They would, I don't know who their accountant is. I guess it's one of the big four. But they're working with them throughout the year. And again, you don't have to talk every day to a strategist. It could just be a simple check-in as quarterly, because now we can catch those things and we can give you those different strategies. So anybody with a pulse, anybody that has a business, and anybody that's organized. And if you're not organized, we can definitely help you get there, but there is value in that. It's not as simple as something you do on a Sunday night when you're tired and you're getting frustrated.
Yeah, thank you so much. So it sounds like to do tax planning, you need to be really, really proactive. It's not something you don't
100%.
in April. You got to have clean numbers. You got to walk through the year, working with your tax strategist with your, goals for that year, probably how much you're projecting for that year,
Mm-hmm.
and how, from that projection, we're able to say, you're going to be paying XYZ in taxes if we continue like this. But here are some things we can do to minimize your taxes. Is that right?
Exactly. You want to be proactive. And I want to stress this enough to all the clients I work with. They're all very proactive. You have to be proactive, and it does take work. This is not a quick fix scheme. This is not, I'm going to snap my fingers and give you $0 in taxes. We can do that. It takes work. But there is a light at the end of the tunnel. And I've really gotten good at charging my clients less than what they save in taxes. Now, that doesn't mean I'm going to charge you $5. That's not what I'm saying. But a good strategist should be able to save you more in taxes than they pay you. Because like anything we do in life or business, there's got to be a ROI, return on investment. So, and this is something too that we can implement for years to come. Now, obviously, we will adjust it if we need to, because things happen. Maybe you make more money. We need to change it to a different entity structure. We need to open up another company. But this is an ever-changing thing. But if you set it in motion, this can set you up for a long time, because as anybody can tell you who's been slapped with a $10,000 tax bill, your biggest expense is taxes, 100%.
That's right. And I bet most business, I don't think any business owner goes into business to go pay taxes. Yeah,
No,
taxes.
I don't.
Yeah, but no business owner goes into business to go pay taxes. They want to, first of all, be profitable. They want to, scale their business. They want to grow. Taxes is something that we pay, but we can avoid paying it if we are being proactive and we take all necessary steps. I don't know if anyone has any question, whether you're watching live on Facebook or you are right here with us. Please go ahead and put your question in the chat box. I know you're driving, Sherman, so if you have a question, please let us know, and we will take 1 or 2 questions before we call it a day.
Yeah, let's see. Let's check if you want to check Facebook for me, Moby. I don't have it, but
yeah, I see Yuri Mavashev, commenting on Facebook. It's just it could be a car. I mean, there are things you can do that you can, save money, and I agree with Yuri there. You could buy a car and you could completely write it off. If you take a trip, you could go
100%, yeah,
with your family, and you could write it off 100%. You could go
100%, yeah, you can. And I didn't want to get I didn't want to get too in the weeds, but since I can't see the comments, but I will go ahead and kind of back up what he's saying is that, yeah, you can definitely do it. I wrote off my vacation to Mexico this year. I'm not going to go into the exact details, but it does, you just set it up. One easy way I'll just say is as long as you go on your trip and you're doing 4 hours of business each day, and that could be anything, as long as it's business related, it's really up to you to tie it back. You can write off that trip. If your husband or spouse or wife in this case also works inside of your business, if your kids work inside of your business, now that trip becomes even more deductible. And as Yuri said, your wife, if she works in it, she might need a car. So now her car becomes a deduction.
Right.
If your kids work inside your business and they need computers, that's a deduction. If they have phones, those are deductions. And I don't know if everybody takes advantage, or I say, don't know. I know most people don't take advantage of that. So the biggest thing we do is we turn in personal expenses and make them business. That's what I'm talking about when you say that when as your business owner, you can elect basically how you're taxed. If you're an employee, you're not writing off your phone, you're not writing off your home office, you're not writing off your car, you're not writing off your insurance, you're not writing off your kids inside the business. You pay what you pay, and you, for lack of a better term, you get flogged essentially. But if you have a business now we can start to turn those in. And again, you might say, how do I have my kids in there? That's something that we can join. We're going to go over that on the challenge or in other future calls. So don't feel like you have to know it right now. Or if you're interested, I know Movi's going to do this. She's going to drop a link below in the comments for everybody. And then she'll do it on Facebook as well to her calendar. And we can describe how we go over these and basically give you some better insight of how to do it.
Yeah, that's right. So individual businesses are, they're different. And your specific situation might be different from another person's. And that's why it's very very advantageous if you could make out time and let's save all this money. There's a bunch of things you can do. You can grow your business with the money you save. You can, life would be a lot easier. They say money saved is money earned, right?
Well, it's not only that. You want to think of it as an investment. You're getting, you're making more money, you're keeping it. And another thing, just imagine this, like how cool would it be to go on a vacation with your family and write it off? I think it'd be awesome.
That'd be awesome.
That's the American
who
dream.
Do that.
I mean, like I said, it's all there. It's all in the tax code. So we're not talking about making things up. We're not talking about doing that. But that's really it. So I know Shaman's out there. I know he's driving, but I'm sure he's liking picking up what we're putting down. And if you are Shaman, make sure to book a call. It is free. There's nothing, I don't think Moby charges for them. So again, if you like what you hear and you want to learn more, because again, I can't answer questions specifically to him. Well, one, because he's muted, but two, I don't want to get too in the weeds and divulge from everybody else. But that was all I had today, Moby. She dropped a link in the comment below, or link in the chat below. Shaman, if you're driving, make sure to check this out on Facebook, because she's going to put a link in the Facebook comments as well.
Yes, I will do that. And plus, it's really hard to give this general information for each specific person. Each individual business owner would have different situations that they can take advantage of. So thank you so much, JT, for joining us. Thank you, Shaman. Thanks to everyone who joined us live on Facebook. Like JT said, I will drop a link for you to schedule time with us so we can learn more. We can learn more about you and your specific situation, and then we can, put some strategies up together, and let's go get all the monies back from Uncle Sam. Thank you so much. Bye.
All right. See you guys.